Namaskar and welcome everyone today on the Elon Markets webinar series. I know I'm looking a little dull because I'm not keeping well, but then I thought not to miss all of you today because I have a special guest today with me, none other than Mr. Vijay Thakre. And I have recently met him, Vijay, and he's really down to earth person. This is what I really liked about him, and he's setting fires in his PL account. He's really doing good, and and I really loved his story also. So that's why I thought like I'll call him up on the show, and you all will learn a lot of things. For people who do not know me, let me introduce myself quickly. I'm Swati Jaiswal, and I'm the head of support for Elon Market and Stock Edge, and taking care of your people, taking care of next another 2.5 million user with us. And I'm very, very grateful that you all have trusted us. That's why we are growing so much. So Vijay ji, welcome to the Elon Markets webinar
Thank you.
series. This is your first webinar with us. So are you excited?
Very excited and a little bit nervous also. This is the first time that I'm doing a session online and teaching about price action or little bit whatever I know about the markets. So yeah, really excited about it and a little nervous.
Right.
So it's my first one. If I make any mistakes, so please excuse me or please help me. My participants whoever are there, I would urge them to please go along with me and help me out and get all the things that are there inside of me, get out of there so that I can share as much knowledge as possible in the time frame that we have.
Absolutely, absolutely, Vijay. Um, Vijay, before we start the show, we would like to go back to your story, to your struggle. We would like to hear out that from you now.
Sure. Okay. So Swati, I come from a very what you can say a middle class family. I am the only single child to my parents, and there was a situation in my life, let's say from when I passed out my 10th standard. So from 2003, okay, my father had medical issues, so he was not able to work. And the only source of income we had was, my mom used to make some tiffins where, we used to give tiffins to people who are students or people who are working people. And I used to help my mother in that. And but then there was a point which came where I was not good at education, so and we didn't have that much of money wherein we could go ahead and get into more of education. So I started working. My first job as a individual was I used to deliver newspapers at people's house. I used to wake up 4 in the morning and deliver newspapers and then try to go to college. But that didn't work out. So I started to work in a factory where me and one of my cousin brothers, we used to make 50 rupees a day. We used to, work for at least 10, 12 hours a day. So that was again very tiring, and that was again something that I was never not able to do because 50 rupees a day helping out your family was not going to be a thing that you can do for a long time. Then I went to a marketing company where I used to do door-to-door sales. I used to walk at least 10 to 20 kilometers a day. I used to walk and every shop that I visit, I had to give them a pitch. I have to offer them a product and try to sell that product. So I almost did that for 2 years, where I went to different kinds of cities, right from all the cities in Maharashtra. Then I went to Goa also. So the turning point of my life, I would say, was in Goa when I was doing this marketing thing, and I was struggling in life really, really bad. I mean, walking 10, 20 kilometers, carrying the products and trying to sell, and listening to no from every person, listening to the no rejections so much. I was a little bit tired and bogged down. And this was the same story that I had shared in Traders Carnival as well, where you know I went to the Majorda Beach, this thing, resort, and I pitched them the product, and I was bashed very badly, and I had really, I had tears in my eyes, and I was like, this is not I want to do anymore. I just had $5 in my pocket. And that night I was not able to have lunch also, because out of the $5, I had to buy a Parle-G for 4.5 bucks, and just eat that biscuit with a glass of water. And that was the moment where I decided, boss, you have to do something with your life. This is not going to last. You have to do something about it. So then I went home, and then I took a BPO training, voice and accent training. I took training for a couple of months. Then I got a job, which was paying good, decent compared to what I was doing. So once I started the job, I got a hang of it. I did very well in sales, because I was already into a background of sales. So BPO was good. And after that, 3 years I did that. I was doing very well, and I was becoming a bit stable. Once I figured out how the BPO business is going, or how BPO runs and all of that, so I started to try to start something of my own, which I failed miserably. In the first chance, I failed miserably. Then again, I had to take some loans, and I had to again go back to work. Then again, when I went back to work, I learned about where I lacked, what I did wrong, and what are the things I could have done right. And after that, after joining the company, after working there for a couple of years, then I understood that this is how you'll have to do business if you want to do something in BPOs. So there I learned about how to do business in BPOs, and thankfully I would say you know, I got a person who I call it as a father figure. He gave me an opportunity, and from a company which I just started with 500 rupees, I within like 8 to 10 years, I was able to take it to a turnover of a 10 crore company. Yeah. So, but again, now coming back to, so I was in all the process that I was going through. As everyone knows that going through night shift, working night shifts, and continuously speaking on the calls, and working night shifts were taking a toll on my body. So with by 2013-14, I was settled. I had family. I had kids. So all of that was going good, but I started having a lot of medical issues, and then I thought, now maybe I'll have to do something else. So as every trader or every retail trader goes through, you get a call from a brokerage company, and they say that invest in this and try to do FNO and all of that. So as we call beginner's luck. So in the beginning I made money, and after that I started losing very badly. And in the next three to 4 years, I lost almost 40 lakh rupees. Yeah. And from those learnings, or from those 3 years of going down the drain, I would say, uh, I thought of learning about it, and focusing more on how we can do, how I can do, or how can I create a career out of trading. So I started learning about price action. I started about learning patterns and all of that. But then again, the success was not there, because I was not able to have that patience, the amount of patience that is needed as a trader. I was not able to have that, and I was not able to have that right psychology. So I had to consult a psychologist also, to find out what exactly is happening. And after all of that, there came a moment in my life there where had to decide, either have to quit my BPO business and do a job somewhere in the daytime, or I'll have to do something in my trading career. So one day, while I was driving home from my office, I was driving and thinking about how I can improve my trading, and I reached home. Okay, I reached home, and I didn't know when I reached home. I didn't understand when I reached home. And then I asked myself, boss, how did you reach home? I had a question. Sometimes you get that, right? When you're in deep thoughts and you still are driving, and you go home and you reach home, and then after some time, you think, "Arey yaar, how did I reach home?" Right? So that was a moment where I thought, trading is like driving. It has to be coming from your heart. It has to coming from the instincts. It has to be coming automatically, what we could say, right? So it has to come like that. So then I started working on that, and then I got couple of mentors also, who guided me very well. From there, one second. Now is it fine, everyone?
Yeah, this is actually fine. The screen is fine. So request the other listeners even.
Mhm.
So Vijay has only shared his webcam, okay? Just the webcam, not any presentation, nothing, which you're gonna do later. So I believe like if you're able to hear him loud and clear, and also you're able to view Vijay, right? If this is fine, just kindly confirm with Y as a yes or N for no. If any point of time, if you're finding that the video is not coming in on your screen, so please kindly please kindly check your internet connection. Yes, so Vijayji, please, yeah, start again.
Yeah. Okay. So that was a moment when I thought that I have to do something about my trading, and I started doing trading full time. Wherein I used to go to my office, work from 8 o'clock at night till 6 o'clock in the morning, and then sleep for 3 hours. Then again wake up for trading, do the trading for the 6 hours, and then again sleep from 3:30 to 8 o'clock. So this was my schedule almost for 2 years, and this is how I learned about markets. Shiva was there who taught me about scalping, who guided me, and who has been a great mentor to me. Then there is Jitendra Singh who also guided me very well. He gave me the personal touch. He had a very good experience, and he was the person who told me that capital protection, how to develop a good psychology, how to develop a good process for trading. So these two people were very instrumental in helping me and guiding me to wherever I have reached in my journey, in my trading journey, and hope through this session I can help inspire other people to think about trading in a way wherein it's a business, not just trading as side income or whatever we can call it, but let's take it as a business and let's give our thought process in terms of business. So this is how my small story has been, and this is how my life journey has been till the time here where I've got to trading.
Right. Thank you, Vijayji. Thank you so much for walking through your journey, your story. So Vijayji, before you start with your presentation, let me convey a basic rules to my listener to make this webinar super effective. So my
Sure.
listener, please, it's a request that, please try to be attentive and attend the session. If you're stuck somewhere, you can use the question panel where you're posting the question. If you have any question, you can put in. So we have suggested Vijay that, once, as and when he proceed with the topic, he will take up the question so that once he move to the next topic, he makes very sure that you are clear with the first part of the presentation that he has prepared for you all people. So today the session, of course, this is a live session and this will be conducted for the next 2 hours. If we find, that we need to extend the session, we will extend with another 30 minutes maximum. So please stay tuned with this. And also the presentation which Vijay are going to use today, you all can get this. How? Also the recording of this session, this live session gets recorded and it will be uploaded by Monday, maximum by 1 p.m. We will upload the recording and also the presentation. Now, how do you see the presentation and the recording both? So what you need to do is you have to log into elandmarkets.com. Under your account, you will find my webinar section. Right there, you will find the recording of the webinar along with the presentation. Now, you might have a question that Swati ji, how many times can I refer to the recording? You can refer to the recording as many times you would like to for lifetime. That will be there into your account. So need not to worry. Now, let's say there is a question by Mahindra ji. He just mentioned a question that Swati, like, what if like I go through the recording and then if I have any question, do not worry. We will take up your question till Wednesday. So all the any pending question, if there is any, we will take up all the question. We will combine all the question and pass it to Vijay, and then we will get the answer from him. Please consider that the reply to your query, if sent on email, will take little time because Vijay is also busy in his regular work. So please kindly help us with us. And also, if you think that I, Swati Jaiswal, is doing a good job calling up people, and the few people who have been thanking me for calling up Vijay, so I take that those thanks. So yeah, so thank you that that you are being connected and you have appreciated me in terms of growing this Elon Markets platform. And yes, if you wish to follow me, you can follow me on Twitter. My Twitter handle is ReachSJ, REACH, ReachSJ, because my full name is Swati Jaiswal. So you can not only just follow me to know what I am posting and all, but also I keep listening. So agar if there is any suggestions, I'll just say a little bit of Hindi here. अगर आपकी कोई suggestion and कोई feedback है, so you all can definitely get back to me. You can put me a DM. I will make sure that I listen to you and I respond to all of you for sure. And thank you, Vijay, again for being connected here. So I would request you can start off with the session. Yeah.
Okay.
You
So
can just share your presentation now.
sure. Okay. Hope everyone is able to see the screen.
Yes, we can.
Okay, perfect. Okay, so today's topic is momentum, how to gauge momentum for option buying, right? So, there is a lot of debate online everywhere, a lot of debate that, option buying is so difficult, option buying is not everyone's cup of tea, or option buying cannot be done, or an option buyer cannot make money consistently over a long period of time, right? So, why is it safe? Why is it so? Why is it so difficult, or why is it called it so difficult? Because you need a certain amount of skill, or you need a certain amount of timing to be an option buyer. Because option buyer has very limited opportunities. Why is that so? Because for an option price to move fast, or an option pricing to move, we need the first and most basic thing we need is momentum. And many people are not able to gauge that, because uh, the problem is, while trading, market is very volatile, the market is very upside down and all of that. So it takes a lot of time and a lot of experience to exactly find out how to gauge momentum. So today I'm going to try to simplify, or try to get to the very simplest of things wherein you can find momentum. So before we do that, if the video is getting frozen, if I can put off the webcam, that is fine. If everyone is okay with that. Would that help? Okay, great. Okay, no problems. So let's start and find out how to gauge momentum for option buying first. Okay. So today's agenda is going to be, what we learn today is identifying momentum using the first thing, that is price action. Okay. Second thing is identifying momentum using the indicators. Third thing, identifying position sizing based on momentum, or how to trade based on the momentum that we are going to see, or what is going to be the position sizing. Okay. Before we go ahead, I want to understand what kind of users we have. For example, what is the experience criteria that we have? So how many are more than 3 years of experience in trading? If you can get a yes or no, more than 3 years. Okay. Okay. Less than 1 year? Okay. Okay. Got it. Got it. Great. So many of our users, team members who are today, are maybe, let's say, more of them are on the side of less than 3 years. So we can say 2 to 1 years. Great, no problems. So now, first of all, let us understand. Let's go to our physics class and understand what is exactly momentum. सब बोलते हैं momentum. Everyone says that there is momentum, but what exactly does it mean? what is the right meaning for momentum? What is momentum is mass and velocity. When there is mass and when there is velocity, mass multiplied by velocity, that brings us momentum, right? Isaac Newton was the one who had developed this concept, and he was the one who founded out this, that this is how momentum can be gauged. If there is mass and velocity, this is how momentum can be gauged. Now let's go and see, let's go and find out and understand the meaning of momentum with a proper example. Okay, I love to give examples of real life because I feel that trading is very connected to our real life. It's a life skill. So if we connect it with our life examples, it gives us a very better perspective. So with this example, what we'll do is we will understand this story. Okay, so there are, if you can see in this image, there are two people, right? There are two people. Let me, this is one and this is the other one. Okay, these two people have found a treasure. They are seeing that they have found a treasure. Now the problem is the treasure is hidden behind a hard glass wall. Okay, it is behind a hard glass wall. Now they want to break it. They want to break it. So two of them, both of them, they are going to get two different objects. Okay, those objects are, one is getting a marble and one is getting a big huge stone, right? These both of the objects can try to penetrate, but when will that happen? For example, if you just take this marble, if you just throw the marble at the glass, it's not going to break. It will bounce back or it will just develop a small crack, right? So the marble has low mass, which cannot break the glass, but the stone has a huge mass, which can break the glass, right? So now the guy who has the marble, if he wants to break it, what he has to do? He needs something else, right? He needs something else. So let's look at that. Yeah. So the marble has a chance to break only if it's fired from a gun. So now the glass can break not because of the low mass of marble, but with a greater velocity. Yeah, exactly. So we need speed. So think of it in that perspective, or think of it on that lines, that an option buyer needs speed, right? An option buyer needs mass. So greater the mass has more momentum, higher velocity also has momentum. And we multiply both of them. That means mass and velocity. If you multiply both of them, that is when you get the real firepower, right? We have seen in the markets also, when suddenly there is a move and the market just goes higher and higher, or on the downside also, when there is a panic and it just goes fast downside, right? We have seen that. So how to identify that, or how to gauge that? Now, as per the understanding of the momentum, as per the momentum formula, we need greater mass and all of that. So let's understand the mass and velocity first from the price action perspective. Okay. First, we will understand from the price action perspective, and then we will understand it from a indicator perspective. Sure. Okay. So now identifying momentum using price action. To identify momentum using price action, these are the four different criteria that we have to look for, or these are the four different kind of candlestick formations that we'll have to look for. Out of that, first is buying pressure candle. Okay. Second is selling pressure candles. Third is neutral candles, and fourth is what I have named it. I have done the naming of it. It's called the Eno candle. Okay, this is the new candle formation that has come up, and it in algos you can call it as a stop and reverse. It's a stop and reverse concept that is called in algos. But these are very, very fierce candles, and we will discuss about them also thoroughly. Okay. Now, first of all, let's discuss about the buying pressure candles. So first is buying pressure candles. How to identify them? Just looking at the candle, you will be able to identify what is a buying pressure candle. Now, a buying pressure candle is this candle formation is easy to analyze, and if the candle closes near the high, that means a green candle, a solid green candle closing at the high gives us a better confirmation that yes, there is a buying pressure going on, and that is how market can maybe go higher and higher. So this is simple concept, right? Everyone watches the candlesticks every day, but this is the simple concept of what is a candle formation. This is the buying pressure candle. Now, second is the selling pressure candle. This candle formation is very easy to analyze. Just looking at the candle, we can tell that yes, if it's a buying pressure candle or selling pressure candle. So a red candle, a solid red candle is going to be a confirmation that this is going to be a selling candle. And the third is neutral candle. This candle formation should be avoided by momentum traders. Why do you think so? Why this should be avoided? Because it is not either a buyer's candle or a seller's candle. It is a neutral candle. That means the fight is going on and the fight has ended right in the middle. Yeah, it is indecision. The fight has ended right in the middle. Now, just that we got the understanding of the momentum. What are these candles depicting? What is this candle and this candle? What are these candles depicting? These candles are depicting the mass. These candles have a lot of mass, right? They are strong. Yes, they have mass. So the first identification of momentum, first criteria. Okay, everyone, please write down it somewhere. This is the first criteria to identify a candle which has mass. So today what we are going to learn, as we discussed, mass into velocity. So first, let's understand mass. This is a candle which has a lot of mass, so it is going to be very, very effective. But everyone will say, sir, after this candle also, maybe how to identify, or where will we enter, where we exit, what will we do? We will discuss that. So in terms of the candle structure, it's a full body candle. It has a lot of body. The candle has a lot of body. Here the candle does not have a lot of body. It has a wick. So the thinner the wick is going to be, it's not going to be giving you a good confirmation. The more it has mass, the more it has green color on the body, that is going to give you better confirmation. Here, the more it's going to give you more mass of red candle, that is going to give you a better confirmation of how the selling pressure is going to be. Okay. So everyone understood the basic concepts. Time frame is 5 minutes. I'm going to explain it. Everything what we are going to do is going to be explained on 5 minutes. So very simple analogy, simple concept that these are the candle formation that we have to identify, right? Now, let's go and see. Now, what we need to do is, yeah, the candles which has wick on both the sides, we have to ignore that. So the first criteria is a full body green candle or a full body red candle. That is the first criteria, right? The second criteria is the location or identifying where that candle is forming. I'll show you some examples. Let's go and see first the uptrend candle. Now look at this chart. Hope everyone can see this. Okay, great. So now what is happening here? Look at the candle formations. What is happening here? This is 5-minute chart. Can you tell me what is happening here? So many are indecision candles, right? Just with that, observe that so many are indecision candles, neutral candles, right? So that means buyers or sellers are both fighting it out. They both are fighting it out and they both are trying to gauge what needs to be done. Consolidation, perfect. Now, as many of our team members who are there today, they have 6 months to a year or maybe that experience. So maybe you don't have that much of a screen time. Okay, you don't have that much of a screen time. So it might be a little bit of a difficulty to understand this consolidation zone. So I'm going to make things easier for you also once we go through the price action thing. Okay. So let's see that we have made Lakshman Rekhas. We have made two brackets that this is the upside zone and this is the downside zone. What we need is this is 5 minutes. What we need is a breakout or a breakdown, right? Now, how are we going to identify that? How are we going to identify when the momentum is going to kick in? When the momentum is going to kick in, when we see a big candle outside either side, right? When we see a candle which is going outside this zone, that is when it will give us a confirmation that yes, now it is breaking out of this consolidation and then it might try to go either side. Okay. Now let's look at the candle formation, how it happens. See this? What has happened after that? Look at the candle formation. Now tell me, does it give you confidence that yes, this was the base or this was the formation that was happening, and now it has given you breakout and up move, right? So now here you have identified the mass, right? You have identified the mass. That once you get good amount of big green candles, that will give you yes breakout with good mass candles. So breakout with big healthy candles. These are healthy candles. They have eaten a lot of food. How to define a zone is, let's say, so this was 14th of October. Yeah, this was 14th of October. The entire day it has consolidated. The entire day it has consolidated. So entire day, how many points it was? 38,893, 38,700. So within 100 points, it was playing around. So Bank Nifty playing around in a 100-point range is very, very, yeah, this was expiry also. So playing out in a 100-point range is, it is giving you an indication that it is a volatility contraction. So a big contraction is happening and suddenly there's going to be a time where that burst can happen. Yes, you can consider the high and low of, let's say, the first 1 hour, or maybe you can mark the zones once the time is going passing by. So, for example, this was the open. After the open, this candle it got into a big consolidation zone. Yeah, it will not happen every day. This is not something that it will happen every day, or this is not something that this trade can be taken every day. This is that we're talking about momentum. So momentum, as you know, market is 70% of the times in consolidation and 30% of the times is when market is running, right? So these are trades or these are setups wherein the momentum is going to be very good and the risk to reward is going to be very, very good. Okay, so this is what we are looking at. So this is full body candle breaking out with volumes with a lot of fears. Now, why do I say volumes? Let's look at it. second. Yeah, I'll tell you. That's what I'm going to go ahead. How to decide. Tanmay, give me 1 second. That's what I'm trying to get into. Take it as 14th October. So this was the day when it happened. So what has happened here? How to identify? It can be futures will be much better. Why? Because you will have volume also. Yeah. This is increasing step by step. The volume is increasing step by step, right? So that is going to the entire day. If you watch the entire day, there was no volume at all. The entire day. Once you broke out of the zone, that is when you got very good volumes. So this is identification. For example, mass you're getting in the candle and mass you're getting in the amount of volume also. So two confirmations. First you have to look for is candle mass, right? And the second one is you have to look for volume. Once these two things are there, that is going to give you a very good confirmation of what is going to be happening. Okay. Now, how do you trade that? How do you trade this? Or you'll say, sir, there'll be fake breakout, or we don't know if it's going to be a fake breakout. We don't know that. As of now, we don't know that. So what we are going to do is, this is the level. Let's just mark it. Current month, this is continuous futures. So you can look at this one also. Yeah, full body candle with no volume is also mass, but again, the second confirmation is not there. So I'll be a little cautious there, Gurdeep. I'll be a little cautious there. Okay. So these are the ranges that we marked. Okay. How will I trade that? How will I trade this situation? Once this breakout has happened, okay, my entry will be somewhere here or this place. Let me annotate. My entry will be here. I'm trading in options. Let's say this was an expiry. So I will trade next week expiry just to be on the safer side. Okay. Just to be on the safer side. I am only a price action trader. I do not use OI data. So just to be on the safer side, I will trade here the next week expiry so that the decay doesn't happen or the strike price doesn't hit my stop loss faster. Okay. Here I take a trade. My stop loss will be if the low of this candle is broken. Okay. If it comes inside the range again, if the low of this candle is broken, that is my exit. That is my exit. So this is how I'm going to identify momentum, and from here I'm going to enter and try to trail it. And in these situations, what I do is I will try to pyramid as well. So for people who want to pyramid or who want to trail it or add the positions again and again, this is my suggestions. Or this is how I do it, or you can write it down how it can be done. Give me 1 second. So what I do is, if the candle is full body, at the 4th minute. Okay, at the 4th minute, if I'm looking at it, if the candle I'm looking at it, it has very good mass. It is almost a full body candle, right? So I will, if I have taken a position here, if I want to pyramid, this is where at the 4th minute I'm going to add. Volume is here on the downside. Okay, so this is what I'm going to do. On the 4th minute, I'm going to add positions. And once this candle opens, the new candle opens, till the time it's going to be full body candle, I will hold the positions or I will book some part of my positions here. Got it? Again, now this is another candle. But what has happened in this candle is it has done an impulse. Yeah, I'll repeat it again. So after this breakout has happened, let's say somebody missed the bus, somebody missed the trade, and he was like, when should I enter? If I have missed my trade here, then I would think that when should I enter? So my entry would be if I want to pyramid or if I want to enter again or if I want to enter a new position, let's say here, then my entry will be on the 4th minute of a 5-minute candle. Got it? 4th minute of the candle. Once I enter into the 4th minute candle, then my stop loss will be 30 to 40 points max on an option. You have to understand the scenario. Maybe people will be having questions, how is it possible, or 30-40 points will be taken away. But I'm talking about the setup. What setup is it? It is giving you a breakout. It has full body candle. It has volumes as well. That is a lot of confirmation that we are going to get. And we are going to add indicators also coming ahead. So that is also giving you additional confirmation. Average volume at least should be minimum of 50,000. Minimum should be 50,000. So this will be my entry point. My exit point will be till the time I am good, till the time the candle is going on, till the time I don't see a red candle, or till the time I don't see a break of the previous green candle. Till the time I don't see a break of the previous green candle, I am going to keep on the positions and I am going to keep on trailing. Breakout volume has to be minimum 50,000 to 1 lakh. Minimum has to be 50,000. If it's 1 lakh or more, then more, nothing can be better. Okay, so this is the entry point and this is how the trade can be executed. So this is about a bullish scenario. You will say, how about a bearish scenario? Sure, I can repeat the pyramiding again. So let's say if I missed a trade here, let's say I missed the trade on the first green candle or on the breakout position. Then my entry can be again on this candle at the end of this candle on the 4th minute. Always remember on the 4th minute. When there is 4th minute, that is when my entry point will be there, and then from there I will take it. And you can adjust your risk or your stop loss as per your risk reward. But ideally, what I would say is the ideal scenario for a stop loss will be a break of the previous green candle. So let's say you're trailing till here. This candle is red candle, right? This is a red candle, but it has not broken the previous green candle low. So till the time the 5-minute candle is not breaking the previous candle's low, that is the moment I'm going to keep on holding that position. This is how momentum can be traded on a shorter time frame. Now let's go and see how we can gauge momentum on the put side or on the downside. this was one up move. Another example we have was on 21st of October. Another we have is 21st of October. Again, what has happened here? Same position, same setup almost. Entire day it was inside a consolidation zone. See, for momentum to be more fierce, please understand this or write it down somewhere. For a momentum to be very fierce, what the first criteria you have to look for is consolidation. The first you have to look for is consolidation. It has to consolidate the entire day, or it has to consolidate for at least a couple of hours. The more it's going to consolidate, the more better it's going to be for you to get into that momentum trade. Okay. Now in this situation, what is happening? You're seeing a lot of up and down move. Yeah, volume needs to be above 50,000 for the fourth minute also. In that candle, you need to see if it's going to be 50,000. So in this situation again, what you see is it's a big green candle. It has engulfed at least last 10 to 15 candles, right? My entry will not be here. My entry will not be here. This is how I look at it. Where will be my entry? At this point. Once the breakout is happening, once it is going up, let's look at the 21st of this thing on our chart as well. So this was the 21st. Consolidation range can be 100 to maximum 200 points. If it's a 5-minute chart, so 100 to 100 points consolidation, and then yeah, again if you see, this is my range. So what has happened again here? Beautiful setup. Beautiful setup. What is it? What it has done? Though my entry would have been this candle only. There are many saying that the entry should be after the red candle only. I understand, but those are for experienced traders. People who are maybe not that experienced, you can go ahead and look at this situation where you get additional confirmation. This is where you get additional confirmation. Why is it so? Because it has broken out of the day range. The entire consolidation range, whatever has happened, it has broken out of that, and then it has made a very good up move. So again, in this situation, okay, I will use a white pen. Yeah. Now is it good? Okay. So this is where my entry again will be in this situation. Now here you'll ask me that Vijay, this candle went down also, so it would have taken my stop loss. Now, please understand this. This is going to be covered next also. This is going to be covered in the next topic. But for now, let's take it as 40-point stop loss, and our stop loss, as we said, as a momentum trader should be the low of the previous candle. So if my entry is here, my stop loss will be this. If my entry is here, my stop loss will be downside. Got it? Yeah, Gurudev, red candle with Green volume is also possible, but that volume will not be green. It will be red only, because if the candle is red, then only the volume will be red. But always have to understand, when you are looking at volumes, always look at volume from a buyer and seller perspective. You have to understand from a buyer and seller perspective, because in a volume, it is not possible that only buyers will be there. There are going to be buyers and sellers equal quantity. So this is the breakout zone. This is the entry point. Stop loss is going to be this, and the trailing stop loss will hit when? When will the trailing stop loss hit? When the low of the previous candle is broken. Let's say here. We can call it here. So the low of this candle was broken. So we can call it here. This can be a stop loss. Or you can call it here as well. The low was broken, sorry. So this was here. So where did the up move start? 39,781. And let's say your stop loss was hit here. Now again, you will ask me, where will I enter? Right? You'll have a question that, I don't want to miss another move. So where will my entry be again? Again, if I see a full body candle with volumes, when I see mass in the volume and when I see mass in the candle, that is where I enter. Again, fourth minute entry here. Fourth minute entry here. Then again, I keep on trailing. This is how you can gauge momentum, and this is how you can identify and trade the momentum using the simple candlestick formation. Simple candlestick. This part is understood, everyone? Is it helpful? Okay, great. So this is up move. This is bullish scenario. Bullish scenario is done. Everyone will, if you have written down, well and good. If not, then you can watch this recording again and again, and that will be very helpful. So once the up move is done, now let's look at the bearish one. Now I wouldn't look at 1 minute chart, because 1 minute is a little risky, and it can sometimes it can be very misleading also. So that's why I would say 5 minute is a better time frame for an intraday trader to use it. Now what has happened here? Again, a very good consolidation zone. How much time it has consolidated? At least more than a day. For more than a day, it has consolidated. And what has happened in this red candle? Yes, again, both of them are Lakshman Rekhas. Once the Lakshman Rekha is broken, then we have to look for the trade. So in this situation, where will I enter? Again at the fourth minute. Fourth minute, right? I will enter at the fourth minute. What is my stop loss? The high of this candle. The high of this candle is going to be my stop loss. Now, let's see what happened after that. Let's see what happened after that. So this is what happened after that. So again, everyone is able to understand the criteria, what we are looking at. What is this date? 27th of October. Let's look at on another futures chart as well, so that we get an idea of the So this is give you a confirmation. Yeah, this is giving you a confirmation, right? It has given you volumes. It has given you a big green candle. It has huge amount of mass. It has a huge amount of mass in terms of candle formation and in terms of volume as well. So once price and volume both are giving confirmation, that is giving you more confidence that yes, now I can go into this trade and I can take it. Okay. What has happened after this? After this consolidation, breakdown and a very good down move. Okay. So this is clear how you have to look for, what you have to look for. And once again a big down move came, the waterfall was very nicely done. Sure. Now the problem what happens is an up move is really good. Up move can consolidate and go higher and higher. But in down move, there is going to be a problem. Okay, down move there is going to be a problem because why? Market inherently is bullish, or there is a saying in the market that a human being and market has to go up only. Right? There is a saying in the market कि भगवान को सॉरी इंसान को और मार्केट को ऊपर ही जाना है. Sorry to use the Hindi, but just to understand the analogy behind it, that every person, a human being, and the market has to go up only. That is the behavior, or that is the natural tendency of the market. So when you're playing on the against, or when you're playing against the market, or when it's coming down, that is the most difficult scenario to play out. So in these situations, yeah, in these situations, the resistance is going to be a lot. In these situations, resistance is going to be a lot. So how we trade on these situations is just looking at the candle formations and wherever the base is created and whenever the bases are broken. For example, here this was the next base that was made, right? This next base was made. Where did you get see more volume again? Here you did not get any volume, right? You didn't get much volume. Here in this consolidation phase, you didn't get much volume. When did you get volume? Was on this candle, or you can say this candle, right? This was the candle where you again got a huge amount of volume. This was the volume for this candle. So when this happened, then you saw a very good fall. So here, if you entered, maybe in this candle, you could have booked some profit or you could have folded the position. Your stop loss must have been hit here. Your stop loss might have been hit here. But again, you will get a chance to enter here. And then you can again try to take a trade. Yeah, we will identify that. No worries. We'll identify how to identify between an impulse and a reversal. We will take that topic also. But first, let's understand these basics. If this is clear to everyone, this is simple price action, and this is clear. Okay. Great. So this is done. Let's take another example of this, and then we can move to other. Yeah, that is a good question. That which call or put needs to be bought. I always prefer what I've observed and what is my observation has been. I always prefer to trade at the money. At the money. So whatever future prices, let's say for example, here the future price is 40,900, right? So I would trade 40,800 or 40,900. This is for the down move, and up move also same thing. For up move also, let's say here you're getting an up move. What is the level? Again 40,900. So I'll trade at the money that is 40,900, or I will trade 41,000 also on the call side. Why? Because I am taking a momentum trade. Please understand, when I'm taking a momentum trade, when I have both of the mass with me, that means the volume mass and the candle mass, when I have both of them together with me, that means the force is behind me, the current, the buying current or the selling current, it is going to be with me. So that is going to help my option price to move very quickly. Okay, so that's why taking at the money or a little bit of OTM is also going to be fine, no problems. Velocity, we're going to learn velocity also. Velocity is where the indicators come into picture. We will learn that as well. So this one is done. Let's see one more example, and then we can move to the next part. Okay, this is another example. Again, see what has happened. It was consolidating for at least 2 hours. It was consolidating for minimum of 2 hours. And what has happened? Again, you got a big mass. The candle has a good amount of mass. Let's go and see on the chart what has happened. This first. This was 15th of, sorry, 16th of November. This price. This is 16th of November. So again, what has happened here? Getting a good amount of consolidation. Yeah, getting a good amount of consolidation for the entire time. You saw a big red candle with mass, with volumes, everything, and after that, started going down. I prefer same week expiry in these scenarios. If it's a 5-minute, if I'm trading on a 5-minute candle, then I would prefer to be having a same week expiry. These are short-term momentums, so 5 minute is fine. So this is what happened after that. Now let's go to our presentation. So everyone understood the candle structure, what you have to look for? Yeah, you can do positional trades on high time frames also. Okay. Now the next one is the most interesting one. The most interesting one. This is a Eno candle. What is an Eno candle? Now why I have named this Eno candle is because when you put a Eno packet, Eno sachet in a glass of water, when you put a Eno sachet in a glass of water, what happens? It will rise first and then it will fizzle out. Right? That is how it works. So it will rise first. That is why we have this guy here. We'll have to use a black one here. Who is this guy? Chameleon. So I always say to all my students that you have to be a chameleon in trading. You have to be a chameleon. You should be able to change your color, or you should be able to change your style of trading as per the market situation. So these candle formations are also acting as a chameleon. These ones, they act as a chameleon. And these are very, very strong candles, very strong candles. Yes, we do see a lot of candles like this, but which one is the better one, which one is not, that is what we're going to identify. Okay, so this is the fourth criteria to identify a strong momentum or a strong reversal. Okay, let's look at them. Now for this, I'm going to show a couple of videos which I've got. Okay, these are why I've got these videos is because understanding a candle is very important, because the you have to watch how the color is changing, how the candle is going to change the color. You need to watch that very, very carefully. Okay. Now in these videos there is going to be my trade also, so please ignore that. Just focus on how the candle changes the color. Okay. Please focus on how the candle changes the color. Let's look at this one. Now see this candle. What has happened to this candle? Give me 1 second. What has happened to this candle? This one. This candle. It's a mass with volume, right? It is a mass with volume. Yeah. But look at the timing also. Look at this timing. This is just the second minute of the candle. Please understand this. This is very, very care. You have to listen to this very carefully. This is just the second minute of the candle. So when we were looking at the downtrend and uptrend, what we discussed was I will enter into a trade, or I will go on the breakout side only when the candle is showing full body till the fourth minute. Yes, fourth minute, not the second minute. So let's see what happened later. Now let's watch it. What happens after the third minute? See what is happening with the candle? Let's forward it a little. Now see what has happened with the candle? The candle has turned completely red. Again, what you have to observe is the size of the candle. What is the size of the candle? Let's look at the chart. What date was this? 9th of November. Let's go to our chart and identify this. Now tell me what is happening here. See this candle? No, this is, it's here. Now this is the candle. Same candle, but the high of this candle has not been broken. The high of this candle has not been broken. This high that was there, it was not broken. And what has happened after that? Once that was not broken, once that showed you a lot of volume and everything, though it retraced back. This is not a trading idea. Okay, understand, this is not a trading idea. This is just identifying the momentum. So this is the candle formation, which is the most trickiest and which is the most fierce also. This level was not crossed at all, and we saw a big down move after that. Now, here you have to understand criteria. Why, when this red candle will come and when there will be a green candle also. I will show you the examples of green candle also. This is 9th of November. Okay. Let's open another trading view chart. Let's go to the daily chart. Where is 9th of November? Yeah, this is 9th of November. I am using full screen. Okay. So what has happened before that 9th of November? You're seeing you're seeing a good down move. It's a head and shoulder pattern, and you're already seeing a down move. So when are these probabilities of these candles coming? Everyone wants to understand, sir, how do I trade at? You don't have to trade these specific candles. You have to see these candles as a trend changing scenario. So whenever you see this, you have to mark the high of these candles or the low of, if there is a green candle. And if that low or the high is broken, that is when, yes, high or low is broken. That is when you will see a big trend changing in that scenario. So that will give you another confirmation that yes, now that the high of that red candle was not broken, the high of this red candle was not broken, and market has closed down. The next day, what you saw was again fierce. So this is how you have to identify that whenever it's going to be a sell on rise market, there is a high probability that you will see these kind of candles. High probability if it's on the downside. Same way, if it's going to be on the upside, I'll show you another example. What happens on the upside also? This candle we saw. Now let's just replay this candle. I'll go to index. Space. It's okay. Yeah, this is the location. Let's just replay this and see what has happened in this situation. Let's just observe what has happened here. How the candle is changing color. See this? Big red trying to, it's showing that it is going to break this consolidation zone. Let's just draw this. Like this. Showing such a red candle that it is going to break the zone. And boom. It touched exactly the zone, the low of this zone that is here, and reversed like anything. So this is called a stop and reverse concept. A lot of algos use this so that they can trap people on either side. And once they know that people have been trapped, once the volume or once the stop loss has been hit, this is what they do. So understood the concept of Eno candle, why it's been used, or how can you identify it to identify if a trend is going to be changing, how it's a trend changing candle. Okay, good. Let's look at another video of a call side candle. That was one example. We can take another example for call side candle. Now see this candle, completely red. Huh? This is a completely red candle. Now watch the timing. Again, watch the timing here. Till the second minute, it is still red. Right? Till the second minute of the candle, it is still red. So 11:25 the candle started and it is still 11:27. Now it's the third minute. See how it's turning into a green candle. You'll see a big spike now. This is what has happened to that candle. It was a complete red candle. It has crossed the VWAP and it has completely become a green candle. So this is how we have to identify that. Now let's move on. And any questions regarding this? I know there are a lot of different questions, but let's get our focus on only momentum, and let's get our focus only on what we are trying to learn today. Yeah, candles should be with huge volumes, and the bigger the size of the candle, the better it is going to be for a trend change. Yeah, that's why I always say whenever you see a big red or a big green candle, you have to wait for the third or fourth minute. You have to wait for the third or fourth minute when the breakout or breakdown is happening. I have not traded Nifty on this, so I'm not sure if it's going to be working on Nifty. So again, this was the same scenario. The green candle that I showed, this was the same scenario. So here, as I said, you have to look for the breakout zone. You have to look for the volumes. You have to look for a follow-up candle. And once you get the breakout zone, once it's breakout, that is when wait for the 4th minute. If the candle is going to turn, yeah, if it's going to be turning or it's going to fail, that means it's a false breakout. I always use TradingView and Zerodha. Zerodha is more than enough. TradingView just I use for price action. Just yeah, this is just for Bank Nifty and this is just for individual script. So one candle is enough, but again, the size of the candle is going to be very important. How much of a level or how much of a range is going to break, that is what you're going to look for. Okay. So let's go ahead and let's see how to identify momentum using indicators also. Yeah, we do option, we do see option chart also. Yes, you have to keep a very strict stop loss with Eno candles because they can be very fierce and the momentum can be very fierce in those scenarios. Yeah, as we said, Randeep, how to place a stop loss due to theta decay. As we said, we are going to be trading momentum. So whenever there is mass and velocity, that is when that trade has to happen. That is when the momentum trade has to happen. So that's why we don't have to worry too much about theta decay. We have to look at the candlestick formation. If the previous candle low is broken, the exit is there. 4th minute start. When the 4th minute has started, that is when the entry point has to be. Okay. Now let's look at momentum based on indicators. I refer both, Pranav. I refer for option buying, I refer the future chart as well and the spot chart as well. I refer to both of them. I'm not sure. I have not used 3-minute chart, so I'm not sure if it works on the 3-minute or not. Now let's take more questions once we are done with this indicators also. Let's take more questions after that. Don't worry, I will try to answer as many questions as possible. So let's take it, understand the momentum setup based on the indicators as well. That will help us identify the consolidation zone more better. Okay. So these are the 3 things I use to gauge momentum using indicators. One is moving averages, second is VWAP, and the third is stochastic. You can use RSI also, but I am comfortable using stochastic, so I use that. Let's go ahead and look at that. Okay, so what I do is I use moving averages. What are the moving averages I use? 20 EMA, 50 EMA, 100 EMA, and 200 EMA. And I use stochastic as well. So let's go ahead and see. Let's first understand what are the moving averages. What is actually moving averages? Let's go and understand some kind of a bookish knowledge what is mentioned there. Moving averages gives dynamic support and resistance and are most useful to gauge the momentum and trend direction. It also helps in identifying range contraction and expansion. and it is also useful for breakouts and breakdowns. It is also useful for targets and stop loss as well. Okay, let's identify that. This is yesterday's chart. This is yesterday's chart. Now, is it easier to understand? Before, while we were not using the indicators, it was a little complicated to understand that, if it's going to break down or what level can be looked at, all of that. Now, after looking at this moving averages, does it give you a better picture? Yes, everyone. Does it give you a better picture once you are looking at the moving averages? Yeah. And look at these moving averages as in terms of support and resistance. Always look at these moving averages based on that. For example, let's look at the 21st that we were looking for. 21st of November. The examples that we looked for. This is 21st of October. This was the example that we took. So what happened here? Now, is the moving average giving you more confidence? Just looking at the moving averages, is it giving you more confidence? Exactly. The EMAs, what happened to the EMAs? When the EMAs are getting contracted or they're making a one string line, when they're making a string line, that is going to give you a clear indication that it is a complete contraction. And what has this candle done? What has this candle done? It has broken all of them together. All of the moving averages were broken in one shot. In one candle itself, everything was broken. Yeah, if anyone who wants to write down, please write down. The EMAs are 20 moving average, 50 moving average, 100 and 200. Now, out of this four, I would consider 20, 50 and 200 the most important. 100 can be avoided also, no worries. But 20, 50 and 200 are the most important. 200 I would say is the best. 200 is the best, I would say. That will give you the best trades. For momentum purpose, if you're trading, 200 will be the best. Okay. And the another confirmation that I use is VWAP and the stochastic. So now we have to identify velocity, right? What are the moving averages doing? Look at the stochastic, look at the moving averages. What are the moving averages showing? After the contraction, what has happened? How are they pointing out? They are expanding and they're moving fierce on the upside. They are, yes, the slope is steep. Look at this stochastic. Look at this stochastic, it is sharp. It is sharp. So what you have to look for is, when identifying momentum, the sharper the stochastic is going to turn. Okay. The sharper the stochastic is going to turn, the better momentum or the better velocity you can have in the move. Now let's again summarize. Let's again summarize what we have done. First, how we identify momentum is the mass, that is the candlestick. First is candlestick, right? So this is giving me a confirmation that it is a big candle. It has mass. We had looked at there. This is the spot chart I'm using because it is not continuous futures. So this gives you identification that it is a mass candle. This EMAs are giving you another confirmation that expansion is happening And this stochastic is also giving you a signal that yes, it is a perfect on the upside. So when it's like, in Hindi we say पूरी कायनात लगी है अप मूव के लिए, या फिर पूरी कायनात लगी है नीचे जाने के लिए. It is like that for me. Kainat as it means all the elements, or all the confirmations are there for you to go in that direction. Everything is saying to you, or everything is screaming at you that you have to go in that direction. Give me a moment. Please write down the settings for stochastic. I prefer to use 533 because I'm using 5-minute chart. This is the format. At the money strike price is fine. So now, is it giving you better confirmation? Instead of just looking at the candle, it might be not that convincing. Now, once you look at all of these aspects together, then it gives you a better feeling, and to your body language also, it is going to tell you, yes, see, all of these are expanding, everything is going in favor. So this is going to give you a good momentum. This is on the upside. Let's look at the downside, where it was, what date it was. Downtrend was 16th of November. Let's look at 16th of November. What has happened on 16th of November? Yeah. What has happened on 16th of November? Again, contraction was happening. Moving averages were coming closer, right? And got a breakdown. Sure. I will show the stochastic setting again. Smooth K is 3, smooth D is 3, length is 5, style is this. Sure. Simple reading of stochastic is, you have to understand how sharp the turn is, or how fast the turn is going to be. See here, there is more amount of gap you see between these lines, the more better. The more amount of gap you see. So again, you have to read stochastic. Please understand this. Yeah, 80 and 20 is useful, definitely. But you have to understand this, that you have to take it in conjunction with the price action. Not just believe the only indicator. First, the rule, as I said, price action is first. The candle formation is first. After that, the indicators are there. The moving averages are there. And third confirmation is the stochastic. If you don't use stochastic, that is fine. No worries. It's not necessary. But moving averages, I would say, are very, very helpful. Very, very helpful. Yeah, you can use MACD also in place of stochastic. But MACD, I'm already using moving averages. So not that necessary. Not that very necessary that you use it. In scalping, it can be used, but for momentum trading, this is what should be the ideal scenario. Hope it's not confusing. Hope everyone is able to clearly get it. Yes. Okay, perfect. Yeah, 200 EMA is something like a mother moving average. 200 EMA is a mother moving average. So it holds the most importance. It holds the most importance. Okay, so done here. Now what we've done is moving averages. We've looked at. Let's look at VWAP as well. Why is VWAP necessary? Because VWAP itself says volume weighted average price. The full form is VWAP is volume weighted average price. VWAP is the most powerful and used indicator for intraday trading. Support, resistance, breakout or breakdown of VWAP on given days helps you to gauge the price momentum. Okay. VWAP is also analyzed along with price action and moving averages, which will give us the best confirmation on the strength of the trend. And one more secret that you have to understand is understanding VWAP of options is very important for option buying. That is a very interesting topic that we are going to discuss now. First, we will look at the VWAP in respective to our setup. Let's go ahead and look at that first. Let's take an example. So if you could see here, give me 1 second. I'm just going to close a few things which are not necessary for us. Okay. So see this one of the examples where the prices started falling and it is taking beautiful rejection at the VWAP. So another way that you can trade or use momentum is, let's say you're in a position, let's say you have taken a short position. Let's say you've taken a short position and you've seen good volumes also. If you see here at the morning itself, you have seen very good volumes. So now the entire day, if you want to trade or if you want to use VWAP as your stop loss, that is very powerful. You can use the VWAP as your stop loss for the entire day as well. If somebody is going to be trading in futures, for futures players, whoever is trading, this VWAP can be a very good stop loss. I hope a lot. I think a lot of people already might be using VWAP, right? Because it's the most common and most used indicator that is there. So how do I use options and how do I use the VWAP of the options for trading? See these options? Such a beautiful setup. What is happening here? Here and here. Get a pen. Here, this one, and this one. Yeah, beautiful support at the VWAP. Support exactly at the VWAP. Yeah. So somebody is just sitting there. Whenever it comes to VWAP, he's buying. Again comes to VWAP, again buying. Again comes to VWAP, again buying. And at the end of the day, the option pricing ended at the day's high. Yes. So this is how VWAP can be used on a trending day. If it's a trending day, you can use VWAP as a stop loss. A full body red candle closing below that will be a stop loss. Again, you will say that, sir, here itself it is broken. But we have to understand, for a VWAP to be created, okay, for a volume weighted average price to be created, you at least have to give it 30 minutes to 1 hour. The price has to create that volumes, or the strike price had to create that volumes, or that amount of, the more amount of volume is created, or the more amount of price traveling above VWAP, then it will be acting as more of a support. Within 10-15 minutes, it's not going to be called as a VWAP. How to understand if it's a trending day? In simple words, if you want to understand, you have to wait for the first 1 hour. It's not possible to understand if it's going to be a trending day till the time the 1 hour is completed for the day. Once the first 1 hour is completed, then you have to look for the VWAP of the first hour. If the VWAP of the first hour is not crossed, and if the price is going to make higher highs every 30 minutes or 1 hour, if the price keeps on making higher highs every 30 minutes or 1 hour, that is giving you a confirmation that yes, it is going to be a trending day. So this was a perfect trending day, making higher highs and taking support at VWAP also, and closed at the day's high as well. This is a perfect example of understanding. So let's say you're not able to take a position at the open. Let's say that we were not able to take a position at the open. Here, maybe we were not able to take a position. So what I'll look for is, I'll wait for the first 1 hour to be closed, that is 10:15. Now, once 10:15 is done, so what I'm going to do is, it is taking support here. So let it cross. Maybe my entry will be here or somewhere on this candle. Why? Because VWAP is taking support in the first hour itself. Now my stop loss is a red candle below VWAP. The entire day, my stop loss is going to be a red candle below VWAP. Whenever it comes, I can exit. That is the identification of a trend day. Okay, now let's move on. Stochastic, as we discussed, it is just an additional confirmation. But first is price action, mass of the candle, volume, what is going to be there, minimum has to be 50,000. Whatever more than that is going to be beneficial. After that, what you have to look for is moving averages, if they have consolidated and if they are going to expand, wherever side, upside or downside, it is going to expand. And the last is going to be stochastic confirmation. So basically for stochastic, for better intraday momentum, I prefer using stochastic. Stochastic gives me additional confirmation in identifying the strength of momentum. If you don't use it also, it's no problem. It's not necessary. It's not going to be huge amount of confirmation because already we are using a lot of things. Now stochastic helps a lot in volatile markets also. When there is two-way both side movements, it helps in that also. And stochastic is, as I said, is very helpful in scalping when market is in a wide range. So as we are talking about momentum, we will discuss it about scalping in the next sessions. Now, how to identify potential sizing based on momentum, or what do I need to do as an option buyer? How do I identify my position sizing based on momentum? Volume, here you can see Here you see all the candles, these are above 100K. What I'm looking for is minimum 50K. So these volumes are more than that. So I am good with that. Okay, so how do you identify position sizing? Now, what is position sizing? Position sizing is something that, let's say I have a capital I'm trading with. I have a capital I'm trading with. The first criteria I have to think about is, as a trader, what is the amount of positions I can afford to take that I will not lose my sleep on? That is the first question you have to ask yourself while trading. What is the question? What is the amount of position that I can accept or my mind can accept that I don't have to worry about it too much or I will not lose my sleep over it? Let's calculate that, or let's try to identify that as well. So this is the position sizing chart that I've made. It can be different for you also. It can be different for everyone. Depends upon your risk reward, because depends upon how much capital you have, depends upon how much amount of risk you can afford to take. It all depends upon that. But this is a simple sheet that I've made. You can play around with it as per your liking or as per your adjustments. But this is how we can do it. Let's say this capital is, the total capital is 10 lakhs. What I follow is, how I follow is, let's take it as my capital is 1 crore. This is how I follow. Let's take my capital is 1 crore. Out of that, my unemotional risk capital, that is this amount, if I lose any given day, I will not be affected. That means 10 lakh rupees is something, if I lose someday without, because of NSE glitch you can say, or because of any kind of scenario, or if it's a black swan or whatever scenario it comes, or you can call it as a free trade also. If I lose that money, I will not be emotionally affected too much. So what I do is, I will only keep that amount in my trading account. Out of the 1 crore, I will only keep 10 lakh rupees in my trading account. If you want to see, this is how I do it. Currently, I have only 7,37,000 in my trading account. Why? Because I don't need the rest of my capital for trading. I don't need it at all. What I need for trading on that given day, that is the only amount I'm going to take. This is the part of my risk management, and this is the part of my discipline that I try to follow. Why it does this? What it does is, it will limit my risk, because the max I can lose is 10 lakhs. I cannot lose more than that as an option buyer. If my option goes to 0, that is the max I will lose. So that's why 10 lakh I have calculated. Let's take it here. Okay, got it. My unemotional risk is 10%, that is 10 lakhs. So number of trades I'm going to go wrong in a row. Let's say 5. Take all of this in contention with whatever we have learned today. Okay, you have to take it in contention with everything that you have learned today. Why? Because you have to identify everything. You have to identify the price structure, you have to identify the mass of the candle, the volume, the moving averages, the VWAP, and the stochastic. Once all of that is giving you a confirmation, this is the risk that you're looking for, or this is the trade criteria that you're looking for. You would say that you don't get these trades often. I understand, no problems. I agree that you will not get this trade every day, but you will get it at least 2 to 3 times in a week or once in a week, right? You'll get at least once in a week. Yes? Okay. So, number of trades that may go wrong in a row. Five. Five is the highest I've taken. Permissible risk per trade. That is 2 lakh rupees. Stop loss in points. I can take it as 40. Lot size is 25. Risk amount is 1000 rupees per lot. That means 200 lots if I'm taking. So my risk management tool is telling me that I can take 200 lots. That is 5000 quantity. Okay. The max I can take is 5000 quantity. But I don't want to do that much also. I can only go with, I will only go with, usually I go with 1200 or 2400. So that is 48 lots or maybe 96 lots. That is what I go with. And if there is huge amount of confidence, then sometimes I go with additional positions also. But the strike price amount will be lesser. So this is a simple model that we have created, or simple risk management tool that we have created. So you can enter into your unemotional capital that you're looking for, and as part of your risk management, only put in the amount that you're not worried about too much. For example, if your capital is 1 lakh, just keep 10,000 rupees in your trading account. 10,000 or 50,000, whatever you feel comfortable with. Here, if you make it 15, if you make it 15,000. So the risk or the number of lots it will allow you to take is maximum is 3. So if you follow these instructions or if you follow these discipline criteria, this is going to help you a lot. Yeah, how to use. Yeah, this Excel will also be provided. So this is how you have to manage your money. See here, permissible risk per trade, 3,000 rupees. Stop loss is 40 points. Lot size is 25. So the risk amount maximum you might lose in a trade is 1,000 rupees. Yeah, in a momentum trade, ideal stop loss should be 40 points. In a momentum trade, ideal stop loss should be 40 points. If it's a scalping, it's going to be obviously different. But if it's going to be a momentum trade, it has to be at least 40 points. No, there is no setting for VWAP. It's a default setting. So no settings for that. Any questions on this? Position sizing? Yeah, Rishikesh, if you follow this Excel sheet and if you calculate your risk based on that, this will help you a lot. As per your risk management perspective, this will help you a lot. This setup you can use for stocks also. I have not used it, but what I understand is that indicators or price or candles, they do not understand any stock or Bank Nifty or index. They only follow price, right? So wherever there is price move, these things are going to work. No, Randeep, I've been trading for 5 years and I've tested this. This is a battle tested setup. This is not something that I have, you know, uh, just to show people I've created. It's not like that. This setup I trade every day, every single day, every single trade I take, and this is a battle tested setup. And based on that experience, I'm saying that 40 point stop loss is well and good. Okay, give me 1 second. Now the presentation part. I hope everyone has got. Let's go down and get into the questions. Let's keep all the questions regarding the setup and regarding whatever we have learned today. I know there are a lot of questions, but these questions are very, I would say, out of the presentation that we have discussed. Let's keep our focus to the presentation. In the next sessions, we will take more, more different setups and more different risk reward setups. So that time we can answer those questions. But as of now, if you have any questions regarding the momentum based setup, please ask. We can discuss them more. 40 points on the premium, not on the spot chart, only on the premium. And I'm looking at a strike price which is around 250 to 300. If a strike price is around 250 to 300, the stop loss of 40 points is very good, no problems. It's EMAs, exponential moving averages. It's not simple moving average, it is exponential moving average. Yeah, setup will work on gap up and gap down as well. It will work. You just have to look at the moving averages. Yes, option chart. If you put all the indicators in an option chart, definitely it will work. If you see here also, it has worked properly. See here in the option chart, it has worked beautifully in the option chart as well. When the moving averages get expanded, so the option is also going to tell you how it's going to work. You can trade the options for support and resistance as well. If a See how it can work as a support or resistance as well. How 200 is going to act as a resistance. How long? I would say you'll have to spend at least 3 to 6 months on this setup dedicatedly and give it a lot of screen time to understand the moving averages and to understand the setup. I would say at least give 3 to 6 months of your time to understand this setup. Yeah, I do use option chart a lot. A lot of it I use. Scalping we'll discuss later. Today we are talking about momentum, so let's focus on that. Yeah, how to differentiate between a impulse and a normal candle. That. Give you a good example. Initial size will be minimum 2 lots. As per this money management tool, this is what you can use as an additional size. Futures chart to gauge the momentum, the futures chart you need, I use so that I can see the volumes also. Once I see the volumes, then option chart can be used as a target. Option chart can be used as a target or stop loss. I am looking at a good impulse candle. I don't look at open interest too much. I am a price action trader, so my focus is mainly on price. Impulse I can show. Wait. We have it in this one only. Okay. So in this situation, this is an impulse candle. Okay. This is an impulse candle. How to identify if it's an impulse candle? How to identify? Let's say this is a big candle, right? Now 50% of this candle, if 50% of this candle is broken by the third minute, please understand this criteria. If you want, you can write it down somewhere. If a full body candle, a green candle is there, and 50% of it, this is the 50%, let's say, right? If 50% of this candle is broken by the third minute, if this candle is breaking by the third minute, then the impulse is over. It can turn, there is a high probability it can turn completely red. Till the time the third minute is not there, then after the third minute, if it tries to go up and turns into green, that is what you can call as an impulse. And a Eno candle is something that after the third minute, it was a full body green candle, it will turn completely red and break the low of the previous candle as well. Hope that is clear. If you want, I can repeat it again. I'll repeat again. This is a full body candle, right? If 50% of this candle is not broken by the third minute, if 50% of this candle is not broken by the third minute, I will consider it as impulse till that time. Once after the fourth minute, it crosses the high of this candle, then the entry point can be taken. The entry trade can be taken on the fourth minute again. And then you can again take the trade. Same way here also can be taken. Now this is you can call a small Eno candle. This you can call as small Eno candle. Why? Because it was a full body green candle and it has completely fizzled out and broken the last candle low. So identification between an impulse and a Eno candle. Open I will discuss in later in different strategies. So this is what the example of impulse is. This is the example of impulse, and this can be the small example of a Eno candle. Again, in this the stop loss will be a small stop loss, the low of this candle. In this candle, the low of this candle will be a stop loss. Impulse translates to it's like it's going in the reverse direction and again firing back out on the upside. So it's something like pulling off and then giving a spike again. Okay, Swati, I think most of the questions are done. If there are more questions, we can take it later as well. Technical name, you can, as per the algo, you can call it as a stop and reverse. As per algo, you can call it as stop and reverse. You should wait at least for 2 hours of consolidation, and you have to look at the EMAs. Looking at the EMAs is going to be the most important part. When the EMAs are getting coiled, when the EMAs are getting coming together, that is when you have to be ready for the setup. That is when you have to just wait for a proper green or a red candle. Once you get that, that is when the setup will be triggered. Risk per trade, again, you have to decide as per your capital. Stop loss, as I said, is 40 points in these trades. Stop loss will be 40 points in these trades. Lot size you can decide as per your risk appetite. But if you use these kind of parameters for your money management, it will help you to stay in trading for a long time. It will help you to be profitable, and it will help you to be staying in trading, because trading, what I feel is, it's all about preventing your capital. You have to make your ground firm for a couple of years. Once you make your ground, your base firm, that is when you can go into more momentum as a trader. So I am in my office. I don't have a backtest report for this strategy for a drawdown, but if you look at the last 6 months of report that I have done, with a deployed capital of 10 lakhs, till now I've made almost a crore. I'm from Nasik. Win rate, I would say 70%. 70% is a decent. Risk to reward, as it is mentioned here, 40 points is your stop loss. Once the low of the previous candle is broken, that is going to be a stop loss. So it can be 100 points, it can be 200 points, or it can be 500 points also. So risk reward can be defined as per that. Before, till the time the candle is not broken, the previous candle low is not broken, your stop loss is, you're going to be trailing that trade. Yeah, if Elon Markets gives me more opportunity to explain about scalping, we will discuss that as well. I am happy using Zerodha, because that is the platform that I am comfortable with, and the charges that whatever, many people have seen the Twitter post, and many people were asking that, why the charges are so high. But to understand that I am a scalper, so I get into huge amount of quantity, and I exit some trades after 20-30 points also. So in scalping, what happens is the exchange transaction charges and the securities transaction charge, that is STT and exchange transaction charges, are 90% of it. So my brokerage overall might be 2 lakh rupees in 6 months, but my charges will be 23 lakhs or 22 lakhs. The other charges and the GST and all of that will be 23 lakhs. out of the 25 lakhs charges that was there. In gap up or gap down situation, you'll have to wait. You'll have to wait for the consolidation to happen. In these scenarios, once the moving averages have already confirmed, then what you have to only look for is a full body candle. Once the full body candle with volume is formed, the high of that full body candle will be your stop loss. Hope it was a helpful session for everyone. Hope it was a helpful session for everyone. See, it is not a setup which will give you signals every day. It will give you signals 2 to 3 times in a week. But if it once it gives you a signal, it will be a very good trade. Because it is, again, as I said, it's a momentum setup. Momentum is something you can take a trade and you can ride along with it. And you can use this same setup on multiple time frames. That is the best part. You can use this setup on multiple time frames. This is the example I've given you for 5 minutes. You can try it on other minutes also, other time frames also. You can try it on 15 minutes, 1 hour, daily also. For scalping, for me, I'm comfortable with 5 minutes. There are many people who use 1 minute, 3 minute also, but I wouldn't advise that. I am comfortable with 5 minutes, so I would say 5 minutes is the best for me. Yeah, I follow 5 minutes and I look at 15 minutes also for more confirmation. So usually this is what my setup is. I'll show you. This is my usual setup. I have 2 screens. I use 2 screens. On one screen, I have my Zerodha setup, and the other screen, this is my second setup that I have. Scalping is something you look for 20-30 points and you keep on booking. Momentum is something you pyramid and you hold on to the position. I knew there was going to be a question that was coming. Yeah, momentum is something that you ride the trend and you try to ride it till the time you can take full juice out of it. Yeah, so as I said, I really like taking real life examples and real life situations to make trading interesting and to make trading have a different perspective. So control Uday zone is something of that sort. Have you seen the movie Welcome? Has everyone seen the movie Welcome? Yeah. So Nana Patekar is always saying control Uday, control. So it reminds you of that. It will remind you of that. Why it's written? It is written so that it is telling you to control your trading in that zone. It is just telling you to control your trading in that zone. So when I put it on my chart, whenever I look at that zone, whenever I mark that zone, and whenever I'm looking at that zone, it is going to clearly tell me, ki, Vijay, wait for that levels to be crossed either side. How to identify? It's simple. Once you get let's say you get a down move, then you get an up move. So the high and low of this, the high and low of this will be till the time the price is between this will be the control of the zone. For starters, people who have just starting out, I would say momentum is better. Scalping requires a very different amount of skill. very different amount of skill set. So I would say momentum would be better to start out with. Yeah, the same indicators, moving averages and stochastic MACD. These are indicators. Okay, everyone. Hope this session was helpful to you. And I would really thank Elon Markets. For a small trader like me who's just been in the market for 5 years, giving me an opportunity to explain whatever little I know about the markets. It's a huge, what I would say, it's a huge privilege that Elon Markets has given me, that I am able to explain whatever little I know about the markets. And really thankful to Vivek sir, to Swati as well, was they saw something in me that I can teach something that can be useful for a lot of people. Yeah, if I get an opportunity again, definitely we'll share about scalping as well. We'll definitely share scalping as well. And you can follow me on Twitter. I am on Twitter as well. You can follow me on Twitter. Yeah, I'm a full-time trader from last 2 years. Target can be 80 to 100 points minimum. 80 points is minimum. 1:2 at least you can take. Above that, whatever you get can be a bonus. In total, I lost around 40 lakh rupees. I've been profitable for last 2 years. Yeah, a very thoughtful advice that I would like to give to people who have losses is your trading journal. Okay, your trading journal or whatever trades that you take. That is the best book you can ever read about your trading or about the stock market. That is the best book you can ever read. Why do I say that? Because always the devil is in the detail. That means whatever mistakes you're making, if you're in losses, whatever mistakes you're making, you have to identify those mistakes. And that is the best book you can ever read. Analyzing yourself, analyzing your mistakes is going to be the best. Please, it's a request to everyone, please take trading as a business. Always understand that many people are into jobs, right? Many people are into job, many people are full-time working, part-time working, and want to be traders, right? When you're doing a job, if your boss gives you a job, if your boss gives you an assignment or a project to work on, if you are not able to execute that project properly, is your boss going to reward you? Is your boss going to reward you? No, right? What he will do, either he will fire you or he will say something that is not going to be appropriate, right? So the same applies with trading as well. Trading is a business. Market is our boss. If you if you make your boss happy, or if you do as your boss is saying, or if you follow the instructions what your boss is saying, then things will be different. So always focus on that, or always think in that perspective. Always set some kind of reasonable or some kind of targets which are achievable or which can be give you comfort. For example, people are thinking about getting into a lot of targets. Let's say if I have a 1 lakh capital, thinking about making 10-20% every day is going to be unrealistic. It is going to put a huge amount of burden on you. So instead, just think about if you have a lakh rupees, first think about making the first 1,000 rupees. If you can prove yourself, if you can prove yourself that you can make 1,000 rupees every day with a capital of 1 lakh for at least 3 months, then you move on to a next place. Then you move on to next target. First, prove yourself. Always. Trading is a battle that you have to have with yourself because it's all about mindset and it's all about psychology. Trading is always a battle that is happening inside us. It is not happening outside. The battle is always inside our head. So always remember, set a very small target for yourself, achieve that, create a good habit. Trading is all about creating good habits. If you can create a good habit for yourself for at least 3 to 6 months, then the road for success will be built. The book name I suggested was your trading journal, your own trading journal. Whatever you have traded for the last 1 year, that is the best book you can read. I always go with market orders because I am a little bit of an aggressive trader and I always go with market orders. So you can go with limit orders as well. If somebody is winning initial trades and losing all profits in later trades, then you have to analyze what mistakes you're doing. You have to analyze every trade that you're doing. You have to analyze the mistakes that you're doing. Again, you have to set a target. As I said, you have to set a target. If your target for the day is done and you are a full-time working professional, then once your target is done, you can stay away, no problems. But create a good habit of accumulating profits. Again, create good habits. Overtrading is not a good habit. Losing is not a good habit. Create good habit for yourself. Brushing teeth in the morning is a good habit that we inculcate from childhood. So the same, we have to inculcate a good habit in our trading also to make consistent profits. So if you're not able to shut down after profits, you have to create a habit. You have to create a good habit. Not shutting down after even profits, or just staying there and losing that profits. That is not a good sign, or that is not a good psychology that you are building. You'll have to change your psychology. You'll have to build a good psychology. How to control emotions. You have to talk to yourself. You have to analyze yourself. You have to tell yourself always. What happens is market is a trance. Okay, market can create a good amount of trance, and a person can get indulged or can get addicted into it. So always you have to be sane. Always you have to keep telling yourself, focus on what you want to do. Focus on it. Always let's just focus on what is the goal ahead, what we want to achieve, or what we are looking to get from the market. Always let's keep a focus on that. Again, as we discussed scalping, we'll discuss later. Today it's the day of momentum trading. So let's focus on that. Scalping is completely different. It requires a completely different skill set as well. Takes a lot amount of different skills. So we will discuss that later. Thank you so much. I hope Swati is there.
Yes, Vijayji, I'm all here.
Okay.
And I
Okay.
could see that people are showing their love towards your session today.
Thank you. Thank you.
So, Vijayji, anything, before we sign up for today? Kuch last, if any last few words, if you would like to say.
Yeah. Again, I would say the same thing is that take trading as a business. If you want to be successful as a trader, please take trading as a business and work towards your goal step by step. Have a reasonable goal of a monthly setup of a quarterly or 6 months a year where you want to see yourself or where you want to be as a trader, what kind of a situation you want to be in as a trader. Please be there and uh, take trading as a learning first. Okay, what happens is a lot of new people have come into the markets in the last 1 or 2 years, and the amount of expectation that people have is not very realistic. So I would say that let's have the smallest of expectations first. When we go to college, right? In the first 1 year, we don't expect money, right? We graduate first. We build our education. We graduate first. Then we go through training. We go through training on a job. Once the training is done, then we start doing our job. And after that, we get a promotion, right? So take trading also that way. The first couple of years, let's just focus on learning. Let's not focus only on making money. First, focus on learning, understanding the process, understanding the setup, understanding what kind of a psychology we should have. And after that, think about making more money.
Absolutely. Thank you. Thank you so much, Vijayji, for being connected with us on this Saturday. And thank you for extending the session by another 30 minutes because you were focusing on taking up the question from my listeners. So thank you so very much.
Thank you
So
so much.
before I wind up the
I mean,
session, let me just quickly.
I'm very thankful to Elon Markets, to you, and to Vivek sir that you gave me an opportunity. I'm really thankful for that.
Yeah, and we are even, delighted and thankful to have you here. So before we wind up the session, let me quickly check with you, Vijayji. So Vijayji, only the presentation that you're going to share with us, yeah, if there is any other Excel file also too, which we need to share, or only the Excel
Yeah,
file,
I will
or only
share
the
the
PDF?
Excel file. I will share the
Okay.
PDF and the Excel file as well.
Okay, great. Thank you so much. We are getting a lot of recommendation in terms of the next session. So we
Right.
have noted, the people wanted to have a session with you
Scalping
on
also.
scalping. So we'll definitely look forward. And also before we started the session, if you remember when we was having some candid discussion, I also mentioned that, this topic needs to be even repeated in Hindi, because there
Yeah,
are few Hindi janta, they really wanted to attend your session. So we look
definitely.
forward to have this session again in Hindi.
Sure, that would be my
Also,
pleasure.
let me ask with my check with my listener: are you looking forward to have live session of Vijay Thakre? Would you love if I call him for three
Live trading.
day? Huh? 3 day. Oh my God, I can see a yes. So many yes. Okay. Okay, all right. So you all have to even promise. See, like I am listening to what you all are saying, right? Now, in return, what I want is whenever you all coming to Kolkata, you each one is gonna meet me and and say hi to me, and I'll get Kolkata Rasgulla for all of you people when you are here in Kolkata. So this is for my listener, not for Vijayji. Vijayji anyways is
Yeah,
coming to Kolkata, but for
sure.
my listener, if I am getting live market session done from Vijayji, and it will be not for one day. I am planning to do it for 3 days. Let's see how I
That'd be great.
figure it out. but this will be for sure for coming year. And next year, 2022 is very important year for me, because that's ideally a lucky number for me. That's a number 6 year for me. So I really I really look forward that the 2022 would be a good year for the rest of the employee that we are. We are 200 people working with Elon Market and Stockage. So yes, so as I said, that the recording of the webinar today is, and the presentation and the Excel file, all these three things will be uploaded at Elon Market's website by Monday 2 p.m. Also, you can refer to the recording for lifetime. So I'll just quickly recap how do you check your recordings. So you have to simply log into elonmarkets.com. After you log in, you will see under your account there is my webinar section. Right there you will find the recording and the other documents. So thank you all of you, and lot of love from my side, and please kindly consider my regards for each one of your parents. Please ask them to bless me, bless my team, so that we can do really good. Mahesh ji has caught me, like, yeah. So Mahesh ji is saying that ideally, Swati, you upload the recording on the very same day. Let me try, okay, Mahesh ji, I'll try to upload the session today only. I'm trying my best, okay. So I never wanted to give a fake promises. So let me place it in this way: 99% of the time, 99% is that I'm going to upload it today, and 1% I'm taking it as a leverage for myself to upload it on Monday. Okay? So thank you everyone. Lot of love to you, and take care. And please take care of your loved ones. Vijay ji, thank you so much, and I
Thank you
look
so much.
forward to see you soon in 2022. Bye bye.
Sure. Thank you.